Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the charts and try to answer that question: are we in a bear market? So we're going to really focus in on Bitcoin. We're going to take a look at the monthly close, I should say, see what's going on there, what we might expect to happen next, and all of that kind of good stuff. So as I get into this video, if you find it useful and informative, do me a massive favor and hit the like button. I really, really do appreciate that. If you're new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you're going to be kept up to date with all the videos that we do here at Cheeky Crypto. If you haven't joined us in Discord, links to that is in the description down below. Fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Right, if you're looking for more from the crypto space around strategy, exits, trading, etc., check out the Patreon as well in the description below. Okay, let's get into this, right? So here we have Bitcoin paired up with USD. We're on the monthly chart, and Bitstamp is the data source. We're specifically using this chart to take a look at a little bit of history here and a little bit of what is going on with our EMAs, right? We've got the 20 and we've got the 50 EMA on this chart. And the interesting thing about this is basically if we close below the yellow line, okay, this is the 20 EMA, then essentially what this is indicating to us is that we go down into a bear market low. Okay, and we can see this time and time again. Okay, so back here in 2014, we closed below it. We wicked above the 50. Okay, and basically we then pulled down into the bear market low. Okay, but essentially we never closed back above it. Okay, so just understand that it was basically about a 4-month period, and we basically ended up closing a bear market low. Okay, now back in 2018, we were riding the 50 EMA quite nicely. We closed below it, and in fact, we actually pulled all the way down to the 50. Okay, the 50 EMA, and then basically just rode that for a couple of months before coming back up again. Okay, now where are we? We've just closed below the 50, also below the 20 EMA. Okay, so if history is going to teach us anything, it's going to tell us that we are more than likely going to be going down into a bear market low if we use the history here to help us understand what the future looks like. Now, obviously, we had the pandemic crash right here as well. Same scenario, except this all happened within 1 month. Essentially, what happened was we closed below the 20 EMA, we went all the way down, wicking below the 50 EMA, then we closed the next month above the EMA. Okay, so points of reference and points of interest for me personally, things that I don't know if other influencers are talking about or not, is let's talk about how this is derived, and is this actually an indication that we want to be paying attention to? First off, we should acknowledge that EMAs are just lagging indicators. They show you past moves, okay? They're basically an average of the price action, okay? So they only show you what's happened in the past. They don't necessarily show you what's going to happen in the future. However, traders and unfortunately retail investors that are aware of these things will be basically reacting to it. They're going to feel incredibly fearful at times that maybe you have a cross of these, simple averages or whatever, and a death cross, golden cross, close below the 20 EMA, go down to a 50 EMA, whatever, right? Essentially, it causes fear, and as a result of that, you find that it will either create selling pressure if there's fear, and sometimes it creates this greedy kind of atmosphere where the market goes up, right? And it goes up because people thinking, it's a golden cross, we're going to the moon, fantastic, right? So we understand that, right? So we understand that the actual average itself means relatively little, and it shows you lagging information. It's what humans are doing with that information that we actually are really interested in, okay? And it's how they react to these things. That's the interesting part. So knowing this, it's one thing that we have to kind of understand. Now, the other thing that we have to understand is there's lots of variables that go into whether a market drops here and here, and why it found support here and here. Okay, and are those variables the same as where we are right now? And as per yesterday's video, the 𝗕𝗘𝗪𝗔𝗥𝗘 is in an incredibly similar position. But there's other data and other variables that we also need to acknowledge and we need to understand before we can maybe jump straight into anything. Okay, so that's kind of the purpose of this video. We've got the monthly close. It is below the 20 EMA. Now, what I'm trying to do is verify as to whether or not the situation or the variables that were in 2018 and 2014 are the same as they are right now in 2022. Okay, and in order to help us do that, we're going to have to narrow down a few things. So we're going to jump down into our weekly chart here, okay, and we're going to find this moment where we actually close below, right? And if I actually come back to that monthly for a sec, we'll find the exact month. So we're talking about the 1st of November. So November was the close below the 20 EMA. So if I come over to it's over here, yeah, so we find November, so that puts us right about here. Okay, so it's the week commencing the 5th of November. Okay, so week commencing the 5th of November. That's going to be the first point of reference that we're looking for. And what we're going to do is we're going to head over to Glassnode. Okay, so we obviously kind of go through this all the time. There has been some fluctuations with Glassnode data, and I'll talk about that later or in a different video. But let's go back to 2018, okay, and let's zoom in on that November period. Okay, let me just come back here. Where exactly we are, the 5th of November 2018. Okay, so I went a little bit too far here. So let's actually bring this right back here, and we'll just shoot on down here ever so slightly. Okay, cool. So what do we have here? What is going on in Glassnode's data that is going to help us narrow down what was actually occurring as this price fell from that 20 EMA? Okay, so we were seeing a little bit of the net difference change. So some Bitcoin was leaving the exchanges, but essentially the exchanges were being loaded up with Bitcoin. So more exchanges on the Bitcoin than was leaving, okay? And now this is a variable that is very different to what we are seeing right now, but we'll also just check, see what it was like if we have the data for 2014. And on this monthly, let's come back to this monthly for a sec. We are talking about month of the 1st of September. I know I said October yesterday, but it's actually September. So if we take a look here, what do we have? It's actually all the way over this side. Let me find it. So we are talking about come on, there we go. Right, so we are probably talking about week commencing the 8th of September 2014. So let's go back to about here, September. Yeah, so basically we see a lot of inflows. Okay, so basically running 2014 data, we can see that from August 2014 to the end of November 2014, there was basically a preload up of Bitcoin on the exchanges, right? So basically the exchanges were being loaded with Bitcoin beforehand, and then basically, yeah, I'm guessing that was kind of sold off as we kind of go through November. Let me just expand this out ever so slightly and see what happens after. Yeah, so basically more Bitcoin leaving all the way through November, going onto the exchanges, sorry, and then accumulation happens in December. So when we come back here and we start thinking, where was that bear market low? That was basically April 2014. So did I get that on the right date? No, because we closed on this in March 2014. So I need to just check that. So March, not September. How did I get to September? Oh, no, that's the month, isn't it? Yeah, so that would make sense. So if I bring this back up here. So yeah, we closed in September. That's right. And then, so if we take a look at that data in September, that's all the way over here. So basically, we see the bear market low coming in December. Then we see the exchange, you see basically the accumulation and the Bitcoin leaving the exchanges. So these two things, right? So if I just get this kind of articulated better, we have basically in 2014 and in 2018, when we had the closed position below the 20 EMA, there was huge inflows of Bitcoin onto the exchanges, both scenarios. Okay, so in 2014, a lot of Bitcoin going onto the exchanges. In 2018, a lot of Bitcoin going onto the exchanges. And then there were outflows afterwards. Okay, now if we move this to 2022, we have the opposite. Okay, so the variables are not exactly the same. So we basically have seen this actually has changed, as I said earlier, right? This I was saying yesterday was 4 million in this year alone has left the exchanges. 4 million BTC has left the exchanges. Glassnode data has refreshed this morning, and it actually shows a different number. The data has changed, which then just pulls into question whether or not Glassnode are altering the data or exchanges are altering the data. I'm not sure. I can't get confirmation, but I did research on Glassnode, and they don't seem to have any affiliation with exchanges. They don't seem to have any affiliation with banks or anything like that I could see, checking out the individuals and all that kind of stuff. So I don't think it's Glassnode side. If anything, I think it's the exchange side with bad API data being pulled into Glassnode. Nonetheless, we're actually at 3.7 million Bitcoin leaving the exchanges in 2022. So a significantly different variable this time around than was readily available in 2018 and in 2014. Okay, now this is an important distinction we have to understand, because what we're trying to do here is we're trying to ascertain whether or not we think that closing below the 20 EMA is going to create the same scenario as we had in 2018 and 2014, right? And these two things led to bear market lows, right? Which would be a fantastic opportunity. However, we don't necessarily want to be selling our entire positions based on history, which has already been invalidated a couple of times through other means. Because it wasn't that long ago that we were also looking at the Gaussian channel on the weekly, and we were looking for whether or not we were going to close below it. Okay, and when you take a look at the history here, for basically, what has been going on with the previous bull runs. Okay, so we had the 2013, the Gaussian channel. Once you closed inside it, you went down into the bear market. Same thing for 2018. Once you closed inside it, you went down into a bear market. The COVID crash is an anomaly. And then we closed inside the Gaussian channel. Okay, let me show you this. This basically closed on the 13th of December inside the Gaussian channel. And then something that has never happened in Bitcoin history happened right there. We closed above the Gaussian channel the very next week. Okay, now that's never happened in the history of Bitcoin. So is the Gaussian channel therefore an indication, no longer an indication of bear market lows, right? It's possible, and we fell right back into it, right? But that one candle in there throws into question this entire indicator as a bear market indicator, okay? And what I'm saying is that we could potentially be looking at our EMA in the same way, right? This, just because it hasn't happened yet in the history, okay, doesn't mean that it might not happen, right? So closing above this, 20 EMA has never happened after we've closed below it. And that's basically led down into a bear market. So the month of May is going to be a critical month for BTC. Okay, so whether we're going to close above this 20 EMA can create a very similar scenario to the Gaussian channel, whether or not we're just going to go down into the bear market low. Taking a look at those variables again, we're under a different situation, right? Different environment now than what was previously. However, the stochastic RSI, the momentum indicator, is exactly the same as it was in 2014 and 2018. Okay, so if you just look at the stochastic, it tells you exactly the same story. Close below the 20 EMA, go to a bear market low. Okay, so we've got to take that very, very seriously. But Glassnode data is also very important, because we've got to not acknowledge, okay, what the whales are doing. If we come over to the addresses with more than 1,000 BTC, what are they doing? They're buying BTC. Now, if we are going down into a bear market low, surely they would be dropping their BTC on the market right now and buying it back when it goes to $25,000. Okay, and they're not going to just give their money away for the sake of it, right? Now, they could be super long-term investors, but when we actually shoot back a little bit into 2020, we can acknowledge that is not the case. They loaded up and they dumped on the market. They're loading up right now, and they're yet to dump on the market. So, questions. We see accumulation going on, over 3.5 million BTC leaving the exchanges this year in 2022 alone, okay? We see whales accumulating. We see the other variable, which I'll bring back up from the exchanges here, which is the balance on the exchanges being a multi-year low. Let me just shoot this right the way back to 2014. Okay, here we are. Okay, so basically, pretty much through the history here, we've seen nothing but Bitcoin being loaded up onto the exchanges. This is the first time in history we'll actually reach that kind of, if you think of this as like an elasticity curve, how much Bitcoin can possibly go up onto the exchanges until you kind of reach that peak and it starts to decline. Okay, so if we think about this, what we are actually looking at is a decrease in BTC on exchanges, which means there's a squeeze on the supply. We see that the whales are accumulating BTC, but at the same time, we have all these bearish flags. which makes you wonder, is the whole thing a bear trap? I don't know. I'm not 100% certain. So I'm going to be kind of waiting to see what happens in the month of May. Are we going to have another scenario with the Gaussian channel where 1 week we close inside and then another week we close above? Are we going to see the same thing with these EMAs? Are we closing this previous month, so the month of April, below the 20 EMA? And are we going to close the month of May above the 20 EMA? Are we actually going to go down to a 50 EMA and all of these variables, right? And there's going to be lots of things that we're watching, and I'm going to do some more technical analysis every day on BTC on the micro movements so that we can be prepared to see what is likely to go on as per Elliott wave theory as well. But I wanted to do a video here where we just want to kind of sit back, take a step back, take a look at all this data and just say, what do we think is the most probable outcome? Are we going into a bear market? Have we been in a bear market this entire time? Are we in a corrective phase? And do we see this thing actually launching in 2022? Personally, at the moment, I still feel that we're going to see a big run in 2022 based on the squeeze on the supply and what the whales are doing. Okay, I often say you do as they do, not as they say. At the end of the day, they're buying Bitcoin. Shouldn't we? That's the question. I'm going to leave the video there, guys. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe? Tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.